Right, we're not seeing a lot of catalysts right now, and I think the slowing global economic backdrop is really one reason for that. But the other, as you mentioned, is that earnings estimates continue to come down, and Q1 looks negative, Q2, Q3 are about flat. All of it's backloaded into the fourth quarter, and to us, that assumes some kind of reacceleration in terms of economic growth, and I just don't see really the catalyst for that.
I've got to I just want you to explain something for me because I'm a little slow here. When you say negative earnings growth, you don't mean that companies as a group are going to report losses. You mean merely that the rate of growth is going to be slower than it was a year ago.
Yes, and as you mentioned, those Q1 2018 comps are hard to beat, right? Of course, we had fiscal stimulus last year, right? We had a lot of tailwinds at our back last year, and as we know, markets are forward-looking, right? So they're starting to price in an earnings environment that simply isn't as supportive as it was last year.
What are the odds, Ron, that the best of 2019 is behind us?
I'm beginning to think that way, given that you had a whole year's worth of gains in 8 weeks, and that, you know, if you booked them now and walked away and put it in some sort of safe haven, you'd be up a little bit more than what the market was for 2019. Having said that, though, I mean, you do need, I think, some sort of catalyst that goes beyond what we've seen thus far, whether it's a very positive resolution to the trade war between the United States and China, and we see trade as having a huge impact on Chinese-European growth, both, or central banks, in addition to the ECB, start tilting towards an easier, not just a flat or pause policy. Then you get the type of catalyst that kicks stocks up, even if it's only for a tactical trade.